Hello everyone and welcome to today's market snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now let's take a look at how the markets are trading, and I think the one that really stands out, or should stand out for most people here, has got to be the two oil markets on the bottom. So we'll start here, and this of course is where the major stories are coming from today. OPEC are meeting in Vienna to discuss the deal which was previously agreed in Algeria a couple of months ago. This was a deal that was aimed to bring production within OPEC, which produces around a third of all oil every day, down to 32.5 to 33 million barrels a day. It's currently just above 33.6, I believe. While they agreed that they needed to bring production down to this, what wasn't agreed at that meeting was how they were going to do it, who was going to be responsible for it, and what stipulations had to be linked to the deal in order for it to be carried through. And since then we have actually seen output from within OPEC actually rising, so it was very important that an agreement was made today. You could see in the lead up to this meeting that oil was actually trending lower, which showed how skeptical people were becoming about a deal. But all you have to do is look at today's candle. It's currently up more than 5% to see that a deal is reported to have been agreed. You can just see right here that we are trading now up 7.5% on the day, as you can see by the box on the right hand side. Now these are only reports at this stage, nothing has been confirmed. The report suggests that they've agreed a deal to reduce output by 1.2 million barrels per day. That brings it down to exactly 32.5 million barrels a day, which was the lower end of what they were aiming for. Now I imagine there's going to be a lot of conditionality attached to this, so I think markets have got a little bit ahead of themselves. We have been trading close to $50 a day. I don't think we actually managed to break above here. No, we've got to $49.94 in Brent Crude. We'll look at WTI in a second, but I think markets or traders are probably waiting for further confirmation from OPEC before they get a little carried away here. At the end of the day, what's been announced by an OPEC delegate, or what's been reported by an OPEC delegate, is effectively what exactly was reported after the Algiers meeting. So nothing new, but it is a very optimistic tone, because it would suggest that the details of that agreement have been agreed, or at least that's what the markets seem to be responding to. I think further details are very necessary, because we know what can fall apart, how quickly these deals can fall apart. For example, if this only happens as long as non-OPEC members agree to cut X amount, then that is one issue that could be faced, and that is assuming, of course, that OPEC members within OPEC actually agree on the finer details, of which a lot of the burden you would imagine is going to fall on Saudi Arabia, and that they actually follow them through as well. That's going to be another thing that's going to be watched quite closely in the coming months. The deal is likely to be for 6 months only, and I think the idea with this is that they're hoping that demand growth continues to pick up into next year, and therefore the rebalancing of the market comes from stabilisation of output combined with faster growth, which should eat up at some of the reserves, or at least again that is the theory of it. Now where we're trading right now is around $50 a barrel, a key psychological level, a prior level of support, a prior level of resistance on a number of occasions as well. I think should we get the confirmation of that deal, and the deal seems feasible and has the potential to actually be carried out, and the backing of the market, then I think we will probably see oil go back above $50 a barrel. And given that we reached $53 previously, I see no reason why we won't hit these levels, at least in the short term, on a deal actually being agreed. But should anything fall apart with deals, should the deal be rejected, should these reports be rejected, then I think we could be trading back at 45, and the inability to actually get a deal, I think, could see us trading back towards the low 40s. But again, this always depends not just on a deal being agreed, but also on the rhetoric coming from OPEC. So the early signs at least suggest the market is buying into this deal. The same can be said with WTI as well. We're trading back at these previous highs around 48.50 in WTI, but again, should the deal be agreed and should the market see the deal as being feasible, then I think we could be looking back at towards these $52 a barrel levels, and potentially even slightly beyond in the short term. Next resistance really coming around these 49.50 levels, prior support, and also prior resistance here and here as well. But again, this is all very, very dependent on what is said and when it's said in the next few hours, because I feel like this is not the last we're going to hear from different OPEC officials, delegates, etc. Prior to the final announcement coming. So the market's just going to be very reactive to that. From here, let's look at dollar CAD. The Canadian dollar is particularly sensitive to movements in oil, which is why, having seen oil rally in the last few days, we are seeing similar moves in the Canadian dollar. Now, what I find interesting here, we're in this downward channel here with the bottom of the channel support coming around 133.50. But you've also got a kind of double top here, an imperfect double top. We've seen this rally for some time now, really over the last since August in dollar CAD. And then we started to make this series of lower highs, so this was a clear sign that the market was starting to look a little bit toppy. We made this low and then we rebounded higher at around 133.80, which almost 133.77, which almost resembles a double top neckline, and we are challenging this neckline here. While it's an imperfect one, I do believe that if we do see a significant close below this level, especially if we see a close below this falling channel, then I think we could see quite a substantial move back. I think even if we take the standard double top parameters, then I think if you take this 133.75 through to even 35, then that's about a $1.60 sorry, a 160 pip move, and that would suggest to me that we could be looking at a move back towards, say, 132-ish, maybe back towards this kind of region, although the next big test really does come around the 132.50s here, which is a prior level of support, but also a prior zone of resistance here. So maybe this is your next big test really, following the break of this level, although if the double top rules are going to play out, you'd expect it to see back to around these 137, where you do get this confluence of moving averages just below here. But like I say, a OPEC deal does favour the Canadian dollar. It is something that people should be aware of who are trading the Canadian dollar and its sensitivity to such a deal being reached, and a feasible deal at that. Next, euro yen. We have seen dollar yen and sterling yen pushing a little bit higher today, but what's different about euro yen is we've got this descending trend line in play, this long-term descending trend line, which actually goes back, dates back all the way to December 2014, I believe. Yes, here it is. Here's the December 2014 highs. You can see that price action has rebounded off this level on a number of occasions since then, and it's now actually being tested once again. The fact that it crosses also through the 200 and 233-day simple moving averages makes it quite significant once again. But what we've actually seen today is a move above here. That is a very bullish move as far as I'm concerned. If we can see a close above these levels, then yes, we may run into some resistance here around 121, 122. But for me, the significance of this, this is symbolic of quite a bullish move, and that would suggest, at least to me, that we are going to see a move beyond these 121, 122s, even if we do find temporary resistance, which could be maybe even see us taking us back towards these 124 kinds of levels. But like I say, this really very much depends on how we close today. If we see a strong rebound off these levels today, then perhaps we are starting to run into some stronger resistance. If we take a look at the 4-hour chart, for example, you can see that the most recent high has been made on significantly lower momentum, so that is a warning sign that this move may not have the legs it first appears to have. Like I say, let's just see how this plays out for the rest of the session, but a close above here for me is actually quite significant. I do think that is a major resistance level that's currently being broken. Next, I wanted to highlight two more things, and that is actually three more charts, sorry. Actually, while we're on the commodity currency with CAD, I did want to touch briefly on Australian dollar, US dollar. Because we have seen a nice reversal here. Now, we saw a strong sell-off in the Australian dollar, despite the fact that we were seeing commodities rallying, so we saw this kind of decoupling with regards to the Australian dollar with the commodities and some commodity currencies. Now, we did see it rally back into the 38.2% retracement zone. This is also a prior zone of resistance, and look at the reversal we've seen off here now. Again, we've got this kind of neckline situation. We've got this kind of evening star formation on a prior zone of resistance and a key fib retracement level around 75 cents to the dollar. If we see a move below 74.30, then that would suggest to me that things are looking bearish once again, and given the size of the move which we've got here, then with it I think we could be looking potentially to move back through these again, the move that we've got on this, again, you'll probably see this better if we go on a 4-hour chart, for example. This again resembles quite nicely a double top with the neckline around these 74.30s. And the size of the move from 74.30 through to 75 is 70 pips. So then you project that lower, and that takes us back to around 73.60, which again takes us back to this prior zone of support. And if we look back on the daily, 73.60 is the prior zone of support. But it's also then would suggest that things are looking a lot more bearish. And again, the next test below here is looking at around $73. So potentially bearish, nice bearish setup forming here on the Australian US dollar, with the decoupling of the Australian dollar from the commodities looking quite apparent once again. Finally, I just wanted to wrap things up with cable and euro dollar. Let's start with euro dollar because while we are continuing to see this kind of range bound for now, we are seeing a lot of pressure on the upside. And what I wanted to highlight here was the 4-hour chart, because despite the fact that we are running into resistance around this 106.50, 106.60 zone, the fact that we're continuing to see this upside pressure does suggest to me that potentially there is a little bit more to it than first appeared. Now, of course, we've got this support here around 106.15, 106.18, and if we see a break below here, then that may indicate that we're going to see a move back towards, say, these 105.60s, or even there's a price at another level in between around 105.85 here. You can see that throughout this period here, and then resistance here, support here again. So 105.80 could be a nice level of support below here. But the fact that we keep seeing this upside pressure, I'm not saying it's going to happen, I'm not saying I'm predicting it's going to happen, but it wouldn't surprise me given the amount of upside pressure we are seeing if we do eventually see a break through 106.80, 106.60 to 106.80, which could trigger a stronger move to the upside. It's just something I spotted on the 4-hour chart, and the fact that we are making the series of higher lows as well, that's the other thing I wanted to point out. We've made a new low here, then we made a couple of higher lows here, and then if we come back to this level again, 106.15, and we've rejected it again, if that's making a higher low, then that again is also supportive of a bullish move to follow, even though we still find ourselves in a range bound market. The same is true of cable. We are very much range bound between 123.50, 125.50, but I'll look at the 4-hour chart. You can see that we've got this series of higher lows. So here's the ultimate low around 123.50. This is the range, the lower end of the range, but then you've got within this range a higher low here at 123.60, a higher low here at 123.90. We've just made another higher low around 124.20, and once again we are seeing this move to the upside, this long lower wick. That for me is quite bullish, so we remain range bound, but the signs are building that we are going to see another assault on this 125 to 125.50 resistance, and if we see this broken, then that could trigger a move, with the initial resistance being here around 126.75 being the previous high, but I think we could see 127.50 to 128 coming under some pressure shortly after. But again, currently remain range bound, but the bullish signs are certainly growing. And given the strength that we have seen in the US dollar for some time now, given that the markets now have heavily priced in this December rate hike, at times we've seen it as high as or close to 100%, that does suggest that maybe a little bit of dollar weakness in the short to medium term wouldn't necessarily come as too much of a shock, even if the dollar index is currently up around 0.15% on the day. Again, all this could very much change as the day goes on. I think a lot of it is going to be dependent on what happens in the oil markets. That's going to have a big impact on what happens in equity markets. There's some big oil exposed indices out there, particularly the FTSE. So for those of you trading the FTSE, you should be keeping an eye on this OPEC deal, because this can change very quickly. and then obviously with oil, those exposed to the oil, any oil deal, so dollar CAD, and to a lesser extent Australian dollar at the moment, although it does seem to be due to the decoupling that we have seen here. So still plenty more to come today. We have had a lot of the economic data out. That's the one final thing I did want to touch on, so apologies if this video now is dragging on a little bit. We have had a lot of economic data out today, so let me just filter down by the US. We've had Eurozone inflation data, but it was in line with expectations, so I won't linger on that. The OPEC meeting, of course, being the big event today, but we have had ADP well exceeded expectations ahead of Friday's jobs report. We've had the inflation data, which was in line with expectations, but the one that stood out for me, personal spending and personal income data. Income exceeded expectations and revised higher. Spending fell short of expectations, but previous number revised high. But when we're looking at numbers like 0.6, 0.7%, or to the downside 0.3, 0.4, that is looking much better for the US than it has previously. So I think these are very positive figures heading into what is likely to be a second rate hike in a decade at the meeting in a couple of weeks' time. We've still got more data to come from US pending home sales. We're going to hear from a few Fed members, Jerome Powell being one of them. There's a couple more speakers as well. And then we've got this here, EIA crude oil stocks change. That is to come in about an hour and a half's time, and given the volatility that we're already seeing in oil markets, I think that's one worth keeping an eye on for sure. For more in-depth news and analysis, check out OANDA Market Pulse at MarketPulse.com. You can also find out more about OANDA and sign up for a free demo account at OANDA.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.